Picture this. It was about 3 o'clock in the morning on a Tuesday. The phone rang. It wasn't a friend. It wasn't family. It was the marina manager. Your boat is gone. A squall line came through the harbor. Line snapped, and she's at the bottom of the channel. Your heart stops. You're shaking. You grab your insurance policy binder from the drawer. You think, I pay $3,000 a year for this. I'm covered. You file the claim. You wait, and then the letter arrives. Claim denied. No payout. No repair. No replacement. Just a hole in your bank account the size of the vessel you lost. I know this sounds like a horror story designed to sell you something, but it's not. It's reality. Over the last 18 months, I've done something no one else has. I gained access to a proprietary database of marine insurance claims, specifically the ones that went wrong. I analyzed 412 distinct boat insurance denial cases. I looked at the policies, the incidents, the fine print, and the correspondence between the adjusters and the owners. I wanted to find the pattern. I wanted to know why good people with valid policies were left holding the bag. Most people think it's about exclusions for hurricanes, or wear and tear, or negligence. Those are factors, but they aren't the killer. There is one specific reason that accounts for nearly 30% of all denials in my dataset. It's a silent policy killer. It's something you probably did when you bought your policy, thinking you were saving money or just simplifying the process. Today, I'm going to show you the data. I'm going to tell you the story of a man who lost $500,000 because of a single sentence on an application, and I'm going to tell you exactly how to make sure this never happens to you. This is the truth about boat insurance that the brokers won't tell you. Chapter 1, Introduction and Methodology. Welcome back. For those who don't know me, I spend my time dissecting marine industry trends. Usually, we talk about engine specs, hull designs, or market values. But, the most critical component of boat ownership isn't fiberglass or horsepower. It's risk management. Boating is inherently risky. We know that. That's why we buy insurance. But there's a fundamental disconnect between what a boat owner thinks they are buying and what the insurance company thinks they are selling. To understand this disconnect, I needed data. Anecdotes are great, but data tells the truth. I collaborated with a marine claims advocacy firm to review 412 closed files where the initial claim was denied by the insurer. These weren't small claims. We're talking about vessels ranging from 20-foot center consoles to 60-foot yacht cruisers. Total value in question was over $85 million. I categorized every denial. Was a mechanical failure excluded by warranty? Was it named storm exclusion? Was it a lack of maintenance? The results were, they were shocking. Mechanical exclusions accounted for 12%. Storm exclusions accounted for 15%. Negligence accounted for 18%. But the largest slice of the pie, the single biggest reason a check doesn't get written, falls under a legal concept called material misrepresentation. In plain English, you lied. Or, more accurately, the insurance company argues that you lied. Now, before you click away thinking, I would never lie to my insurance company, stop. Because in 90% of these 412 cases, the boat owner didn't think they were lying. They thought they were answering a question. They thought they were estimating. They thought they were protecting their premium rate. But in the eyes of maritime law and insurance contracts, intent doesn't matter. Accuracy matters. And the specific area where this misrepresentation happens is the one I'm about to break down. Chapter 2, the data breakdown. Let's look at the geography of these denials. You might think this happens mostly in Hurricane Alley, Florida, Texas, the Gulf Coast. And while the incidents happen there, the denials happen everywhere. Connecticut, California, the Great Lakes. This tells us that the issue isn't the weather. It's the paperwork. I dug deeper into the material misrepresentation category. I wanted to know what exactly was being misrepresented. Was it the value of the boat? Was it the engine hours? Was it the owner's driving record? Value is a factor, but usually that just reduces a payout. It doesn't deny the whole claim. Experience was a factor for new captains, but insurers usually just require a survey or a course. They don't deny outright. Modifications was a big one, adding turbochargers or changing fuel systems without notifying the underwriter. But the clear winner, the number one reason for a total denial coverage, was usage and storage misrepresentation. This accounts for 29% of all denials in my study, nearly 1 in 3. Here's a scenario that plays out again and again. You buy a boat. You love the boat. You want to use the boat. But insurance for a boat that is used frequently or stored in certain areas is expensive. So when the agent asks where will the boat be navigated, or how many days a year will the boat be used, or where will it be stored during the off-season, you give the answer that gets you the best rate. You say, oh, just coastal waters, but you plan to go offshore. You say maybe 30 days a year, but you plan to live aboard for a week every month. You say it'll be in dry storage, but you plan to keep it in the water year-round. It feels innocent. You're not trying to defraud anyone. You're just unsure of your future plans. But that uncertainty is exactly what the insurance company uses to void your contract. Chapter 3, Case Study, John Sunseeker. To show you how devastating this is, I want to walk you through case file number 204. Let's call him John. John is a successful architect. He buys a 45-foot cruiser. It's his dream. He puts $150,000 down on a $600,000 vessel. He insures it for agreed value. He feels secure on his insurance application. There is a section labeled Navigational Limits. The policy is written for inland and coastal waters. This is a standard, cheaper tier. It means you stay within sight of land, generally within 20 miles of the shore. John signs it. 2 years later, John decides to take the boat from Fort Lauderdale to Bahamas. It's a common trip. It's only 50 miles offshore. He figures it's a big boat. It's seaworthy. What's the difference? He makes the trip. He has a great time in the Exumas. On the return trip, the weather turns. A squall line hits faster than forecasted. A wave crashes over the bridge, shattering the glass and flooding the electrical systems. The engines die. John has to be towed back to the U.S. by the Coast Guard. The damage is extensive. Saltwater intrusion in the electronics. Structural damage to the windshield frame. Engine diagnostics ruined. The repair estimate comes in at $180,000. John files a claim. He expects a check. Instead, the insurance company hires a marine surveyor to investigate the loss. The surveyor does everything right. He checks the engines. He checks the hull. But then, he checks the GPS data. Modern boats have digital footprints. The surveyor downloads the chart plotter history. He sees the track line. He sees the boat cross the 20-mile coastal limit. He sees the coordinates of the Bahamas. The insurance company sends a denial letter. They cite breach of warranty. By navigating outside the agreed limits, John voided the coverage for that trip. And because the loss occurred while the warranty was breached, they owe him nothing. John argued. He said, I didn't know it was that strict. He said, the boat is capable of ocean travel. He hired a lawyer. He lost. The legal fees cost him another $40,000. In total, John lost $220,000 because he crossed an invisible line on a map that he agreed to 2 years prior. But wait, it gets worse. In my analysis of the 412 cases, John's situation was actually the clean version. In 60% of the usage and storage denials, the issue wasn't just a one-time trip. It was about where the boat slept at night. Chapter 4, The Storage Trap. Let's talk about the hurricane clause. Almost every marine policy in a coastal state has a named storm warranty. It says that if a hurricane is named, you must move the boat to a specific safe zone or haul out of the water. But here is the trap. The policy defines where the boat is normally stored. Let's look at case file number 315. A boat owner in North Carolina. He keeps his boat at a marina in the Sound. It's protected water. On his application, he lists this marina as the primary mooring location. This gets him a lower rate because the Sound is safer than the open ocean. However, during the summer, he likes to keep the boat at a different marina, closer to the ocean inlet, because it's more convenient for fishing. He doesn't tell the insurance company. He thinks, it's still in North Carolina. It's still a marina. What's the big deal? Hurricane season arrives. A storm forms. The owner is out of town. He can't move the boat. The storm surge hits the oceanside marina much harder than the soundside marina. The boat sinks. When the claim is filed, the adjuster asks for proof of location. The marina bill comes from the oceanside location. The policy lists the soundside location. Denial, reason, material misrepresentation, a risk. You might be thinking, that's predatory. I pay my premiums. From an insurer perspective, they price the risk based on the Sound. The ocean inlet is a higher risk zone. By moving the boat without notifying them, you change the risk profile without paying the appropriate premium for that risk. In the 412 cases I analyzed, the most common variation of this was a live aboard issue. Many policies explicitly forbid living aboard the vessel, or they allow it for a limited number of days, say 14 days per year. I found 45 cases where the denial was triggered because the owner was living on the boat during a loss. Maybe they were renovating it. Maybe they were just enjoying a long weekend. But if the policy says pleasure craft only, no habitation, and you sleep on board and a fire starts from your coffee maker, you are not covered. The insurance company views a boat with people sleeping on it as a higher fire risk, a higher liability risk, and a higher wear and tear risk. So, the number one reason for denial isn't that the boat sank. It's that the boat was being used in a way that the underwriter didn't agree to insure. Chapter 5, the insurance logic, why they do it. I want to pause here and play devil's advocate. Why are insurance companies so ruthless about this? Is it just greed? Partly, yes, but mostly it's about actuarial math. Insurance is a pool of risk. Everyone throws money into the pot, and the people who have disasters take money out. For the math to work, everyone in the pool has to be similar. If I insure a boat that stays in the garage in Ohio, and you insure a boat that lives in the water in Florida, we are not in the same risk pool. When you misrepresent your usage, you are effectively stealing from the pool. You are paying the Ohio garage rate while exposing the pool to the Florida hurricane risk. When a massive loss happens, the insurer looks for any reason to protect the pool. That's why they dig into the GPS data. That's why they ask for marina contracts. They are looking for that discrepancy. The legal principle here is you bear me fidei. It's Latin for utmost good faith. Marine insurance is one of the few contracts where this principle is strictly enforced. It means the burden is on you, the insured, to disclose anything that might affect a risk. You don't wait for them to ask the right question. You have to volunteer the information. In 80% of the denial cases I reviewed, the boat owner could have avoided the denial if they had made one phone call. One phone call to say, hey, I'm thinking of taking this trip, or I'm thinking of staying on the boat for a month. The worst thing you can do is assume. Assume nothing. If it's not written in the policy, it's not covered. If it's not disclosed on the application, it's a risk. Chapter 6, Actionable Advice. How to protect yourself. Okay, enough doom and gloom. You own a boat, or you want to own a boat. You need insurance. How do you make sure you aren't part of the 29% statistic? I've created a checklist based on the 412 files. If you do these 4 things, you drastically reduce your chance of denial. Number 1, the water conversation. When you buy the policy, don't just answer questions asked. Answer the questions not asked. Tell your broker your dream usage. Tell them, I plan to go to the Bahamas once a year. Tell them, I might keep the boat in the water during winter. Yes, your premium might go up by 10 or 15%, but that is cheaper than a 100% loss. Pay for the coverage you need, not the coverage you hope you can get away with. Number 2, the endorsement check. Ask for specific endorsements. If you want to go offshore, ask for an offshore navigation endorsement. If you want to live aboard, ask for a live aboard rider. Get it in writing. An email from a broker saying, yeah, that's fine is not enough. You need it on the policy declarations page. Number 3, the storage audit. Every 6 months, look at where your boat is. Did you move marinas? Did you change from dry stack to wet slip? Call your agent. Update the policy. If you move the boat into a hurricane zone during storm season, notify them immediately. Create a paper trail. Number 4, the digital footprint. Be aware that your boat has a black box, chart plotters, engine monitors, even your phone's GPS if you use marine apps. If you claim you were in one place, but the data says another, you will lose. Be honest about your location in the event of a claim. And finally, if you do get denied, don't give up immediately. In about 15% of the 412 cases I looked at, the denial was eventually overturned, not by suing, but by negotiation. Sometimes the adjuster gets it wrong. Sometimes the misrepresentation wasn't material to the specific loss. For example, if you lied about where you stored the boat, but the boat burned down due to a manufacturing defect in the engine, a good lawyer can argue that the storage location didn't cause a fire. But that is a hard, expensive battle. Prevention is always better than litigation. Outro, we buy boats for freedom. We want to escape the grid, feel the wind, and explore the horizon. It is incredibly frustrating to think that freedom is bounded by paperwork, navigational limits, and storage clauses. But the ocean doesn't care about your freedom, and the insurance company doesn't care about your dreams. They care about the contract. The 412 denials I analyzed represent real families. People who lost their savings, their retirement funds, and their passion projects. Most of them were good people who made honest mistakes. They thought they were covered. They thought they were doing the right thing. Don't let a signature on a page ruin your time on the water. Read your policy. Know your limits. Disclose your plans. If you found this analysis valuable, if you want to protect your investment, do me a favor. Share this video with your boating group. Send it to your captain. Send it to your broker. The more people who understand the usage and storage trap, the fewer denials we'll see next year. If you want to understand how these insurance traps connect to your marina contract, you should check out my previous video, the $287,000 marina contract trap. I break down the exact clauses that shift liability from the marina to you, and, well, it's the perfect companion to what we talk about today. You can find that link right here on the screen or in the description. And for next week, I'm going to be sharing something that's going to make you question who you trust with your boat purchase. I'm diving into the broker scam that stole $1.2 million from retirees. I've got the actual court documents, and the details are, honestly, worse than you'd expect. If you're working with a broker right now, you're not going to want to miss that one. I'm going to link a downloadable checklist in the description below. It's the policy health check I use to categorize these claims. Use it before you renew your policy this year. If you want more deep dives into the marine industry, the hidden cost of ownership, and the data behind the boating world, make sure you subscribe to Yachtverse and hit the notification bell. We have a lot more data to crunch. Safe travels, keep her dry, and read the fine print.